Hello guys, this is fairbuynovyoptions.com, and it is weekend, of course, and we're looking at preparing the next trading week, in the sense that we should look at currency pairs, how did they act during the previous trading week, and how to make a plan for trading them on next week. Now this is the Euro US dollar, the 4-hour chart, and I zoomed out the chart as much as possible in order to see as many candles as possible, because I think that we are at an important crossroads in the Euro US dollar, and a bit of more continuation to the downside is needed. Why? Well, first of all, I would like to mark the beginning of this move to the downside, the now famous 140 level, when Mr. Draghi said that the ECB agreed on easing measures, and I will go with a 5-wave structure to the downside, this being the first wave of an impulsive move. Let's make it red. Then, of course, the second wave is done with this contracting triangle here, and this is being called a double three running, or it is a running variation of a complex correction. As you can see, these are the highs or the lows in the previous first wave, and these are the highs where the second wave ends. Whenever the second wave ends below the lows of the previous first wave, that is being called a running variation, as basically the second wave does not correct or does not end into the territory of the previous first wave. Then you need what? Then you need an extended wave, a wave that is more than 161.8 when compared with the first wave. But if you go and take the extension and you measure the length of the first wave, this is the length of the first wave, and then you take the 161.8 out of it, from here to here, like this, and then you take the outcome, let's make it like this, and then you take the outcome and you put it at the moment when the second wave ends here. You see that this is the minimum distance to be traveled by the third wave in red, and has been reached around what, 126.28. So that was the minimum distance to be traveled. So you take this one and you put it here, and you have an impulsive move for the third wave, more than 161.8. Extension is there, so Mr. Elliott is really happy there. But then we should look at the principle of alternation. What does it mean? It means that according to the principle of alternation, you need to have alternation in both time, structure, even complexity, and the distance the price travels between the corrective waves, namely between the second and the fourth wave. Well, if that is the second wave, I would say this is the fourth wave. If that is the second wave of a complex structure, the fourth wave is only a classical A, B, C in the form of a zigzag. What to look for then? Well, we should look for the fifth wave. Normally, the fifth wave comes respecting the rule of equality in between the first and the fifth. So the logical thing to do is to measure the length of the first wave here, like this. Make it a bit bigger. Let's change the color for it. Let's make it blue, and then you take it, and we should project it by the moment that the fourth wave is completed here. This is the moment that the fourth wave was completed, 28.85, almost 29. And now we should go for around 124. This would be 100% correlation between the first and the fifth wave. It may go even or only 61.8, or it may go even 161.8. I am not, let's say, saying that it's going to do one or the other, but what I'm saying is that this baby is going to go below 125, and when you trade binary options, and according to your analysis price is moving to the downside, or is bounded to move to the downside, then the only way to trade this currency pair is by taking a put option or buying put options. Therefore, what I would like to do heading into next week's FOMC meeting is to buy put options at the beginning of Monday, but then I would like to buy call options every time market goes 24.50, 24.60. I would like to buy a call options here with of course end of week expiration date. And that will mean what? That will mean that if price ends the week between 26.68 like it is, so let's say 26.50 like the market will open on Monday, so between this and between 25, then our both options or scenarios will bring profit. So let's write here on the screen that the plan here, or the trading plan, is number one, looking to buy put options at the opening on Monday with end of week expiration date, first of all. And second of all, what I would like to do is looking to buy put options, call options, sorry, by the time price goes 1.2450 or even 60 area, with again end of week expiration date. Well, this is the Euro US dollar. This is Saturday, as you can see, the 25th of October, and we make a plan to trade the pair both on the short side, represented by put options, and on the long side, represented by call options. Well, if you have a plan, then why not just trading it? Have a great day. Make sure you go and check our Fair Binary Options website, including the Binary Options Academy, and keep in touch. Bye bye.